I want to start by calling out an idea that sounds smart and it gets repeated all the time. And this is the idea. If I offer the highest price, I win the deal. That sounds logical and it feels competitive. And it's one of the fastest ways buyers waste time and lose credibility with sellers. It's not always just about the price, there's a lot more that goes into it. If you're focused only on the headline price in the LOI, you're missing what actually gets deals accepted and closed. I'm Trent Lee. I'm the number one business broker in the country. I've been involved in over 600 transactions, and I make these videos because I see what works, I see what fails, and what quietly blows up deals after the LOI is signed. My goal is to save you from learning the hard way so you can get your LOI accepted. I see buyers get excited about price, and sellers get frustrated by everything that comes after it. And most of the tension comes from one thing. The LOI looks good, but it didn't actually say how the deal is going to close. So let me slow down and break this down a little bit. An LOI is not about who pays the most. Of course, it's part of it, but it's not just about who pays the most. It's about who feels the safest to work with. So here's the framework I want you to use when you think about drafting an LOI. Clarity beats price. The clearer your terms are, the more confident the seller feels, and confidence closes deals. Now, let me walk you through the terms that matter more than the headline price. First off is due diligence. Every LOI has a due diligence period, but most buyers treat it like a placeholder. Sellers don't. If your LOI says 30, 60, or 90 days, whatever it happens to be, the seller wants to know what you're actually doing during that time. What documents will you be reviewing? Financials, tax returns, payroll, bank statements, contracts, licenses. List it out. And what's worse, and I've seen this, honestly, why I'm making a video this week, is I've gotten 4 LOIs this week, and not one of them has a due diligence period. We don't even know if it's 30, 60 days, shorter, longer. It doesn't specify. That leaves a lot of gaps and confusion for the seller. When an LOI just says buyer to conduct due diligence, it tells the seller you haven't thought through the process. Clear buyers list the category of documents up front. That builds trust before the due diligence even starts, and they have a defined period. Now let's talk contingencies. Contingencies are not bad, but vague contingencies are. Financing contingency, lease approval, licensing, partner approval. If the LOI says subject to financing with no detail, the seller has no idea how real you are. Here's the part that people miss. If you don't already have a bank conversation happening, your LOI is just a wish list, which brings us to proof. Ability to close matters more than intent to close. A serious LOI includes bank pre-approval if debt is involved and proof of funds for the equity portion. Without that, sellers don't know if you're a buyer or a browser. And a really good LOI will outline what amount you're putting down and how much financing you're expecting from the bank and how much financing, if there's any, for seller financing. I see sellers accept lower offers all the time because the buyer showed they could actually close on the transaction. Now, let's talk about money. Earnest money tells the seller how committed you are once the due diligence starts. Is it refundable? When does it go hard? Who holds it? If your LOI is missing all of this information, it's not going to be taken as seriously. An LOI that doesn't explain this creates anxiety. Sellers want to know when you're truly committed and when they can stop marketing the business. Now, this leads into escrow or a closing attorney. Who's handling the closing? An escrow company, an attorney, a title company, if there's real estate involved? This matters because it signals professionalism. Sellers want to know how this is going to be handled cleanly, not figured out later. So let's talk about inventory and working capital next, because this is where most LOIs fall short. If inventory is included, then say it clearly. If it's excluded, that's fine, but just note it as well. Ambiguity here creates renegotiation later, and that's what we're trying to avoid, is trying to renegotiate a bunch of terms that should have been agreed up front. Working capital is even more important. Sellers cannot accept an LOI if they have no idea what your working capital calculation is. Is it included? Is it not included? If it is included, how are you calculating it? So let me slow down and just spend a little bit of time here. If your LOI says reasonable working capital to be delivered at closing with no explanation, the seller has no idea what you mean. Are you talking about cash, receivables, payables, a specific dollar amount? How are you calculating whatever you mean to be reasonable? A strong LOI explains how working capital is calculated and it gives an estimated target. Even a range is better than nothing at all. This isn't about locking numbers in too early, it's about avoiding surprises later. So let's talk about timing. The closing date matters. Is this a 30 days close after due diligence, 60 days, subject to bank timelines? When an LOI has no specific closing timeline, sellers assume the buyer doesn't understand how long the deal will actually take. And finally, training and transition. I see a lot of LOIs leave this out. How long do you expect as a buyer for the seller to stay? Do they stay on full-time, part-time, remote, paid, unpaid? Is it a hybrid? Maybe there's a period of unpaid and then there's a period of paid training and transitioning. Just spell it out so your LOI includes it. This matters to sellers emotionally and practically. Clear transition terms reduce fear on both sides. So here's the problem I see. Buyers focus on price, sellers focus on certainty. The LOI that wins is not necessarily always the highest priced. The ones that win are the clearest. They're the ones that have certainty, that address everything that's in the seller's mind to give them confidence that you are the right buyer to move forward with. If you're a first time buyer, your LOI should show that you've thought through this entire process, not just the purchase price. If you're an experienced buyer, your LOI should remove as much seller anxiety as possible. So, before you send any LOI, ask yourself this question. If I were the seller, would this LOI make me feel confident or cautious? Would it bring up a bunch of questions that are unanswered in your LOI? If the LOI creates more questions than it answers, it needs work. Price gets attention, terms get accepted. So clarity closes deals. If you found this helpful, I run a free school community with over 30 hours of step-by-step education on how to find, analyze, and buy a small business. It's completely free to join. If this video added any value, use the description below to join the free community, or feel free to share the video with someone who may be going through this exact process and needs to know more about how to properly draft an LOI. See you soon.